for me, it's always about progressing and leveling up. For me to be able to increase the amount of income from trading, it's two things. It's either refining slightly over time. I don't mean turning a page black and white, but just noticing something over a 6-month period is working better and adding that in and doing it again. Another 6 months goes by, you find out there's one tweak. Okay, I'm going to add that in. And then the second thing is just capital. So I went from trading personal capital into prop firms because I found that a better return on investment. You could spend 5K on challenges and make 50K in profit. All you've done is allocated 5K. You've not put up that full 50K in personal capital. So the ROI is insane. And in the last 12 months, I've done $250,000 in prop firm verified payouts. I have all the certificates to prove that. But my next goals are entering the futures market and going that one step further.
Well, folks, here we are in Trading Up. We've got a familiar face for those who have stuck around for it. The last 2 years, he was on 2 years ago. We've got Scott Taylor in the house from Evolution Forex, and what an evolution it's been. We're about to hear what he's done in the last 2 years. So, Scott, let's welcome you back to the show first, and then find out what have you done.
Hey, man, it's been a very quick 2 years since I was on the show last. It feels like yesterday. Thanks for having me back on.
It does.
Yeah, it's flown. And so like, excuse the pun, obviously evolution is built into me as a trader, and absolutely things have evolved, not just progress, but the way that I trade. And I think this will always be a part of my trading journey. And I think that's one of the things that I want to be able to give value to anyone watching this, is that you can find something that works, whether it's technical strategy, psychological processes, journals and routines, but in order to get to the next level and progress, something needs to change, right? So even if something is working, it doesn't necessarily mean that that is how you should stay. So that's the way that I see it. I almost see trading as an athlete would look at their sport. If a coach came along and said, I can get you to run quicker than you already are, even though you're a gold medalist, would you like to know how? They would, of course, say yes.
Yeah.
So you need to be looking at trading at next levels, and also just from a goal perspective, pushing boundaries. So I went from making consistent four figures a month in trading. Now I'm making consistent good 5 figures trading. And my next goal is to make consistent 6 figures in trading. In fact, in April this year, 2025, I did $121,000 in prop firm payouts in that month. And that was the biggest month for me. Was a big achievement. And in order for me to do so, in the 6 to 12 months prior to that, I had to make some changes and refinements to my strategy, which naturally happened over time. Things that you spot, things that you find for your own journaling, your live trading. Of course, you still do back testing. It doesn't matter how long you are as a trader down the line, 10 months or 10 years, you're still going to be doing the work, right?
Yeah, and I hear you just managed to get like $1 million in funding with Apex as well, just this week.
Yeah, just this week. I mean, obviously, a trader's results are also at the helm of the market conditions, but when you can catch a trend, and if you can trade with a trending market and be present and be focused and disciplined and all those good things, you take advantage of that. And yeah, I've managed to pass literally $1 million in funding with Apex futures trading since Monday this week. It's now Thursday, right?
Yeah. Well done on that. Now, look, it's great to have you back on, because I mean, somebody who's been sticking at this for like the last 2 years and evolving, which I think is what a lot of people struggle with, is that evolution phase, right? So, for whatever reason, you obviously had something that was working back when you were trading Forex, and then you transitioned. Now, this might sort of be where somebody goes, right, I'm going to change my whole strategy and just like reinvent the whole thing, because I'm going to change, or they don't know how much they should change. Can you sort of step us through that whole sort of like, path to change that you did make, and the little tweaks you made to what you were doing, and why you decided not to sort of fundamentally overhaul everything?
Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450K in funding. The best part, you keep 100% of your first $15K in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.
Yeah, I mean, even in the last 3 to 6 months, I've still made subtle changes. And like I said earlier, I think I always will. I mean, if we're still in the trading game in 10 years from now, how do we know, how we're going to be trading then? All we can perceive is hopefully we're going to be trading better than we are now. And it's having that growth mindset is the biggest thing, right? But yeah, I went from trading Forex to trading indices, and I didn't change the strategy at all. I changed that in February 2024 because of two things. One, I couldn't for the life of me find a trend that lasted longer than a week or two on euro dollar, for example. Whereas if you jump over to the SP 500 or ES for futures or the NASDAQ or NQ on futures, you could catch a trend for 3, 4, 5 months, right? So if my strategy, which has always been and always will be, as far as I can perceive it, is trend based, number one, and following a trend, why not look at a trending market? And I still do that now. So I have a list of 2 or 3 indices. So I'll trade the SP 500 or NASDAQ. I'll trade the German 40 or DAX, and I'll trade gold. And I'll basically rotate on my daily watch list based on one thing. And that one thing is which one is a trending market. And I'm not trading gold right now because we've been basically in a higher time frame consolidation since around the end of April. And we're now mid-August, right? So I'm actually in a long position on an FTMO since the 20th of May on gold, and I've not touched it since. Right. It is a swing account, but there's like $5,000 in swaps on that right now. That's growing. But if you look at NQ, it's been trending almost every single week for months and months and months. So, I mean, today alone, I had 3 positions on NQ. That's not typical. I normally take about 2 to 3 trades a week, but 3 in a day. It's when the market is that good, you need to take advantage.
And so it sounds like your trades are lasting sort of a number of weeks versus you're in and out of the day. Is that correct?
Yeah, it really depends. If I'm trading CFD firm, so FTMO, Funded Next, Funder Pro, they're the firms that I have found over the last 12 months reliable and that just suit me well. They're all swing accounts, so I will trade them based on 4-hour mapping and then 15-minute entry 95% of the time. And then I'll look at like 4-hour or daily structural points. Gold even more so. Gold has been very, very bullish. I did very, very well in April, hence the record payout month. Gold was reaching all-time highs and was extremely volatile with the tariffs introduction, etc. And then gold obviously started consolidating soon after that. So if I'm in a gold position in a very trending market and I'm expecting a round number to be hit or an all-time high, then I'll hold that for potentially weeks. And this FTMO trade is it's a one-off. I'm not holding trades for months usually at all. It's usually within 24 hours.
Okay. Oh, okay. Right. Okay. So it's a one-off, right? So that's what I was trying to get to, because it was like I believe some of these prop firms have rules where you got to close all positions by the end of the week and that kind of thing. So so usually it's 24. Okay. So you move from Forex to like CFD futures kind of style trading, i.e. those markets that are trending. What other things did you change to over the last 2 years in adapt?
So, I mean, in the last, I'd say 3 solid years, the fundamental basics of my technical strategy are the same. I'm looking at the 4-hour as kind of my structure, my higher time frame structure, primarily looking at trends, highs and lows, ranges, any imbalances in the market. And then I'm coming straight down to a 50-minute. I'm not looking at any noise in between, and I'm looking for either time frame alignment or a specific target to trade into. So let's take, for example, you might need to picture this in your head, is like NQ yesterday was very, very bullish across the board. Bullish weekly, daily, 4-hour, 15-minute, very, very bullish. However, we had London that impulsed away from Asia, didn't take any liquidity on the way up. New York did the same, continued above London highs, didn't take any liquidity on the way up. So I'm saying if New York comes down in my key time, trading New York session on NQ, and takes London lows or Asia lows in a way that I like, I'm going to take buys. And I was that confident in how trending that market was and how confident that the price was going to come into the lows that I sold into it. Price then didn't actually push higher until way after my kill zone had ended. But then something very, very similar happened today, and I ended up taking 2 buys on the same exact principle and then taking a sell after that buy side liquidity was taken. And most of that comes from the clarity and the confidence around a trend. Like the trend is your friend till the bend at the end. It's one of the first things I ever learned 11 years ago, and I'm still doing it now. The way that my strategy has evolved is more through market experience. So looking at how price opens in the first hour of Asia. Has it opened above that first opening, that initial balance, or is it opening below? Looking at price action on a 4 hour, where we used to call it no follow through or NFT. So we'd have a wick at a high or a low. I'm still looking at that. I just don't call it that, right? Still using 4 hour range boxes like I did when I jumped on here about a year ago and even before that. And I'm looking at liquidity in the same exact way. Sometimes I'll drop down to a 5 or a 1 minute time frame for a refinement, but 95% of the time or more, it's taking off a 15 minute.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Yeah, it's interesting. Like if you guys go back and actually watch the video that Scott recorded for us, where I think you might have even done like a kind of like a back test scenario where you went through a period of time and took a few trades. I mean, you had such a mechanical strategy at that point that like you went through it and you did it very quickly, like 15 minutes. And I think you'd like missed out a couple of rules here and there on the odd trade setup, and everyone's like, "But you said this, you said that," and it's like it's not that black. He was doing it as a demonstration, folks. It was not that black and white. But it sounds like you've got even more kind of grey in terms of, well, not necessarily grey, but I suppose the intuition / experience is sort of fed into your trading, and where the trend is your friend, which I think is one thing that trips a lot of people up, especially new traders, where. I mean, I've said it myself like so many times that the trend is essentially your biggest, most powerful indicator, right? So when you've got a trend, that's probably number one. So the number one thing is everything that's going to go against that trend is probably going to fail, even if it's part of your strategy. So just the trend is like even more than your friend. The trend is everything, really. When you've got a trend, that is. When it stops and reverses, obviously you may get screwed up there. So the interesting thing I've found really between you and like almost every other trader I've not interviewed, but just seen along my journey, is that you decide not to strategy hop, right? So you were stuck with this strategy. Why did you do that? And even when you could have, changed fundamentally, you decided not to strategy hop and just stick with the one that was, that you'd done all the work on in the first instance.
Yeah, I mean, first of all, I think. Maybe some people watching this that have known me for 2 or 3 years might say, well, on the contrary, Scott has strategy hopped. But if you've actually followed me closely for the last 2 to 3 years, it's been a slight evolvement over time, which again goes back to what I said before, that whole ethos. That's why I called my company Evolution, because I've always been about evolution and evolving as a human, evolving as an individual personally and professionally, as a trader. Again, if you hit the gym, do you go to look the same? Or no, because you're wasting your time if you do that, right? So you should always look to pivot and evolve. But again, it's not like closing a book fully, throwing it out the window, and then going and trying something entirely new. Maybe in the very beginning stages, because this, if you're in your first 6 months of trading, there is a lot to learn and you don't really know where to go. And it's probably best at that point to try lots of things until you find something that resonates with you. But I'm 11 years into my trading journey. So I am sticking with what have, over my experience, what has resonated with me the most, what has stood the test of time, like trend, and what essentially moves the market and gives you better, precise entries such as liquidity. The only other nuances and refinements come from practicing at least 6 months in a live market situation before I add something in. So let's say in the last 12 months, I've started looking at a line chart on a 4 hour. So if you go onto TradingView and go to the top, you've got price action, you've got volume candles, you've got line chart, bar chart, things like that. So let's say you're in a 4 hour consolidation And not only that, but most of the 4-hour candles at the highs and the lows of that range are wicks. And you're thinking, where is the liquidity, or where is the true high and low? If you go to a line chart, it just gives you really clearly the bodies. It just removes the wicks. That's something that I started implementing in a 4-hour consolidation when price action is very wick heavy. It's not a complete strategy change. It's just a little addition. And then you've got the initial balance looking at Asia. That again is just a confirmation of multi-time frame analysis. So if the 4-hour is trending bullish, we're printing higher highs, higher lows. We've come into a 4-hour low. Maybe we're in discount of a range. I'm looking for a reversal. I jump to a 15-minute, which is my entry time frame. And then price has pushed above the initial balance of Asia. It's more likely to come back and respect that and start creating higher highs and higher lows in the 15-minute. It's more of a complement to what I'm already doing. And this is something that professional traders will do. Who knows? It's like I see my progress as a glass ceiling, right? I don't see it as you stop at this point. And I think those that are so against change are either fearful of change and they're too worried and they're just scared that it's not going to work. Well, progress doesn't come without failure and challenge for a start. Or it just comes from a place of ego, someone feeling like they want to be right. And just because they've studied something for 6 months, 12 months, 24 months, and it's not quite working for them, they think, well, if I change something now, it's throwing everything in the bin. Well, it's not, because that's part of the journey. That's part of the progress, right? I was taught by many mentors and I haven't thrown any of them in the bin. I think they're all part of my journey, and I'm blessed to have taking pieces from each of them, and then even from the market, which is the biggest mentor, of course.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
Yeah, it's interesting. I mean, like, it kind of reminds me of like back in the past of seeing things in a price chart and gone, what the hell? This actually happens like pretty religiously, which means, and then sort of go, well, why does it happen? Okay, well, it means that other people are getting into this move and they're seeing that this is the point to get into the move, which is, I think, what may have happened with you with the underlying fundamentals of your strategy. And it becomes easier. I think this is a kind of a takeaway for people, easier to tweak something or to adjust something rather than sort of throwing the baby out with the bathwater and starting a whole new strategy and going, okay, well, that worked there. Yeah, there was, obviously institutions or whatever getting behind that move, but let's just find something better and throw everything out and start again. Whereas it sounds like you've just kept the core thing that you've obviously saw, and I want to get you to confirm it. Did you see, like, when you were back testing originally, like, were you thinking other people must be taking this kind of trade as well, because, well, bigger players than me, because you're not going to move the market, right? Did you see that, and was that sort of like a core fundamental thing for your underlying strategy, and has given you the confidence to not just do as well as you've done, but move from Forex to futures or Forex to CFDs and still be successful?
Yeah, so moving from Forex back in February 2024 to Indices was more of a move again in line with trend and volume. We know that Indices has more volume in the market than Forex does anyway. And I found that Forex had really reached a point where it was just consolidating for months and months and months. And this was obviously impacting trading results. No trader wants to sit on their hands for 2 months at a time just to pay the bills, right? As a worst case scenario. But if you move to a trending market and your strategy is already trend-based, plus you add that with greater amounts of volatility, you're in and out of the market quicker, you have more confidence, you have less chart time because you have less consolidations. And, if the 4 hours consistently breaking high highs and higher lows and not actually giving momentum shifts or changes in trend, which is typically the areas where traders give their profits back, it's just a win-win scenario. Then, trading Indices for 18 months now or so, it must be. And I'm still doing so now, but changing over and I'm still trading CFD prop firms, but I'm transitioning into futures. So using Apex and even Tradeify. That's more of a case of allocation of capital. So, becoming max allocated with FTMO, that means I have 200Ks I can trade at once. Great. You can make good money from that, but you're limited, especially when the FTMO come and give you a 1% cap on your account.
Right.
which happened to me, and it's happened to many people, right?
Right.
It's not the worst thing that's happened to me with props, but you've got those restrictions involved when you're profitable. Then you've got, Funder Pro, a great prop firm, great trading platform, max allocation 200K. So you can only trade with 200K. Then you've got Funder Next, 300K, reach that. I've had three 100K accounts. And I'm not linking those together. So do you then go from making 4 or 5% a month to trying to make 10, 15, 20% a month? Like, come on, let's be serious, right?
Yeah.
You're not going to do that. So to make more money as a trader when you're already profitable and you're already consistent, it's just a game of capital. And that's where I see futures coming in. Easier to pass, probably more difficult for payouts. Depends who you speak to because of the rules. But your max allocation is in the millions.
Yeah.
So 1% a week on $1 million is way more than 1% a week on 100K.
Yeah.
And you're doing the same thing. You're not working any more hours. You're not refining your strategy. You're not putting more risk on. And the entry level is very low because it's on a subscription model. And I'm not affiliating. I'm just saying this is my experience.
Yeah. It's interesting, like, because I mean, you do get varying stories where people just get really annoyed with prop firms, and they go, it's all just like it's all just a have, and then you've got yourself who's doing really well out of them and has decided to move all your capital to or trade only on prop firms. So, withdrawal issues and all these things that other people tend to have. What is it about your strategy or your approach that you think, I suppose, aligns more with props than others?
From a risk kind of perspective, probably not so different. I mean, I've had smaller, less heard of prop firms that I've tried and they've not given me an account, and then support team have ignored me. And I've other prop firms that have done the same. And when I say I have an Instagram account, they pay me out. It's like, okay, so I didn't break any rules, right? So it's more about you didn't want to pay me. Yeah. And then you have the big boys like the FTMO that didn't pay me $41,000 in April. And obviously I don't want to go into too much detail because I don't want to end up in a legal battle, but for rules that were not there, essentially, cutting a long story short, I bought 3 times gold, 1% max per position in a bullish market in April, back end of April. And every position that I was in wasn't in the same day. They're all different days. Trailed stops to break even, but apparently I'd risked 3%. But I hadn't because I'm trading my stops to break even on the first position. But not the way they saw it. And there was something called one-side trade betting as well. So I was essentially only buying in a bullish market, which makes sense when you're a trending trader. I should have been selling too, apparently. So they didn't pay me out $41,000, but I'm still trading with them. They allowed me to keep the account. And that's why I'm in one position now on gold. Like, I think it's running about $20,000 in profit, but the swaps are 5K because it's been live since 3 months ago.
Yeah.
But I'm limited now.
So even you aren't like, impervious to these, potential issues that come with prop trading.
I don't think anyone's invincible to being denied a payout, especially the bigger firms that don't really care who you are. And I don't think it's really about, I didn't want to use my name to kind of bribe a payout that I am owed anyway. But props can be sneaky. It can be unregulated, but you've got to go through that experience. And I feel like for at least my inner circle, those that follow me, I've gone through a lot of prop firm experience since August last year, so the last 12 months, and I've been able to say privately which ones to avoid and which ones to go for based on my own experience. And I'm going through that transition now into futures firms as well. So I'm having a good experience with Apex and Tradify as well. And then when I get to a point where I'm taking regular payouts from them or not, based on rules and how, if they want to pay me out, then obviously I'll just feed all of that experience through to anyone that looks up to me as an aspiring trader, I suppose. That's all I want to do now. I'm very content. I went through a long battle to becoming consistent. And those that haven't watched my first interview with you in 2023, just that interview, not the technicals, but I think there's a lot that's relatable in there to people. No one believed in me. I was constantly told I was wasting my time. It took me way longer than I think it should have, good 6 years without making a penny. And, having children, having multiple jobs and businesses running at the same time, moving house, all these things. And I just want to give back to anyone that is struggling, because it's such an amazing opportunity, but it's such a hard thing to do.
Yeah. And so, like, what about struggling traders and they're going, oh, what do I do? Like, I got an email just yesterday from somebody who said, I'm struggling with my trading. I've always, I've been struggling for years. What would be your advice to this person?
So if someone was like fresh coming in,
not fresh, but they've been around for a while. I think
yeah,
I believe this person have been around for a while, and they said, "Yeah, look, I've just been really struggling. I'm trying to get back on track." What advice would you give to them?
So first of all, I hear a lot of traders in the kind of the social media world that say trading psychology is a scam, and I really disagree with that. Because if you're having a bad day away from the charts and you try to trade the New York session, you will be destroyed, right? You're going to make really bad decisions.
Yeah.
And I've worn the T-shirt many times, filled a closet. So you really need to get your mind right first. Like if you are wanting to trade, whether it's that day, that session, that week, that month, or just look at trading as a whole, I think you need to first of all look at your surroundings. And again, it's not going to be easy. Because again, I had family, closest family, people that I lived with telling me to stop trading, right? So you've got to listen to yourself and try and channel that out somehow. But if you're really under a lot of financial pressure, don't trade. If you don't have an income right now, don't trade. You need to sort that out first, because that's all going to add stress. And if you're unhealthy or unwell, don't trade, right? That's that covered first. I think that needs to be said first. Then when it comes to trading capital and want to make money, everyone says this, right? Focus on the skill first, the money comes later, but everyone dives in to try and make money now.
Oh, yeah.
I did the same. You end up just paying twice as much. Just finding either someone's YouTube channel and sticking with it. You don't necessarily need to pay someone. There are obviously a lot of mentors out there, and there's lots of different ways of trading that work. There's loads of different ways of trading that works. What stuck true to me, like we said earlier, and I think you agree, is trend. Try and find a trending market. If you trade one strategy in a consolidating market and you trade that same strategy on a trending market, you will get very varied results. Which is one of the reasons why, through experience, I tried a heavily mechanical strategy, which worked very well in a trending market. As soon as that trend was no longer there, it didn't work anywhere near as well, right? So that was a refinement and an evolvement and an experience in itself. And I'm always going to experience things. I'm only human, right? So trying to find a market that trends really well, like indices, trade the NASDAQ, trade the SP 500, or trade the gold when it is trending, and try and find a way of, on a higher time frame, such as the daily or the 4 hour. 4 hours is a sweet spot just to identify higher highs, higher lows, or lower lows and lower highs, and only trade in that direction. And then I would go as far as saying, how much screen time do you need? Pick one session. Like for me now, I'm trading 90% just New York. I'm in the UK. I can trade London if I want to, but sometimes I'll just go out for a walk instead. I'll just do something else.
Yeah.
Because my energy and my time and my focus is way more funneled into New York session. Plus, I know if I'm trading indices, most of the volume is there. Less is more is a big thing. I always come back to that. I mean, a lot of traders that will come to me and say, I'm struggling. I'm like, how many sessions are you trading? And how many days are you trading? How many assets are on your watch list? Oh, loads. I'm like, well, that's why. Like, less is more. And that goes on to the next thing. Like, if you are looking for a trending market, look for a trending market. Don't have all the indicators flashing at you and all the symbols under the sun because it looks good on your chart. Just have one. Don't even look at anything else. If you have trading friends that are trading EU or GU and you're trading SP 500, don't just ask them kindly. Don't even share your analysis. Just only look at your own. And if you have a mentor, theirs as well, or YouTube channel, something like some kind of guidance. And yeah, just follow that trend and just really minimize your screen time and avoid the lower time frames as well. Like even now, I'm using 4 hour daily as mapping structure, higher time frame trend, and then liquidity zones for higher probability setups on a higher time frame. Then I'm coming straight down to a 15-minute, and I'm 95% of the time just taking a trade straight off the 15-minute. You don't need to go all the way down to the 1 minute and chow this, chock and flip and all these kind of things, retracements. And the more indicators you chuck at it, the less clarity you actually have. And once you find a very simple system that works, obviously backtest it over hundreds and hundreds and hundreds and hundreds of hours. But there's no real comparison to a live market, that's for sure. Backtesting will only tell you so much. You probably need to half that kind of results for a live market.
Yeah, less is more is such a big takeaway, and ironically, very hard to do. Right? I mean, I do remember seeing something on Apple, and it was like, their whole thing was like, let's bring it down to simplicity. And I saw a speech, and the guy was like, being simple is actually extremely difficult because you've got to cut, and you've got to be, very rigid and disciplined to be able to do that. And I think, even, you're saying like, I'll walk away from London, I won't trade it. I know that there are other people out there that would say that to themselves, and it's easier said than done, right? Because they'll say that, I'm not going to trade London. But then they'll be there twiddling their thumbs, whatever, if they're in the UK or Europe, maybe going, well, I'll just have a look. How do you get away from that? I mean, because that's all mindset. That's what you brought it back to at the end there was mindset. How do you do that so that you don't fall back into these ways? Or is it some kind of pain? You've had pain in the past, you've done it, and you just don't want to be there again.
Yeah, I mean, some of the biggest lessons are the painful ones. You could have someone telling you, don't do it, and then you won't listen anyway, and then you'll be stung that many times that you'll then learn through experience. I don't want to feel that pain anymore, right? So it's like being a teenager and your mum and dad are telling you to get to sleep because you're going to be tired in the morning. You won't listen, and then you're super tired the next day, and then you realize in your 20s that you should go to bed at 10 o'clock, kind of thing. But yeah, I think mindset, well, I don't just think. I know mindset as a trader is an ongoing thing. Like, I still have anxiety when I open a trade. I'm human. How can you eliminate emotion when you're an emotional being? But what you can do to minimize and manage it is everything, like your environment, your thought processes. How is your mental health? If you're finding yourself complaining about other people or things, if you stub your toe on the desk and you start shouting at it and saying, God damn it, I'll just kick my, like, you there's something not right there. You need to look at life in a very positive way, not to become narcissistic, of course, and start skipping through life like a dream, but you need to be realistic, and you need to be very positive, and you need to be really calm. I'd go as far as saying it is different from person to person. I'll tell you one thing, I've been recently diagnosed with dyslexia. So I'm 38 years old, and I've only been told recently that I'm dyslexic. But it makes sense because I was not academic in school, always struggled with reading instruction manuals, get very frustrated by some simple tasks, very short attention span. If I go to the shops for 4 items, I have to have it written down. So for me, I have to really know myself, and I will see a trading psychologist now and then to help me with my trading. That's one of the fundamental reasons I believe that helped me to get to that 6-figure month, because I had to realize what's really going on in here, first of all, to be able to then say, okay, this is how you can level up. This is strategies and things that you can put into place to go to the next level. Things like how to manage anxiety, routines, and just really getting to know yourself. Like, why are you forgetting this, or why do you have brain fog? Why do you tire at this time of day, and things like that. So that you've got to really learn about yourself. It's all very well and good listening to me or another trader, but you've got to realize, again, through experience, you can't cut corners in trading. You just can't cut corners. Like, I could say, oh, I'll take you from zero to funded profitable trader in 6 months, but that's a bold claim because I don't know, the house you live in, the environment you grew up in, all these things. So you've got to take that with a pinch of salt. I can absolutely take more of an experienced trader or someone that's been in the markets maybe 2 or 3 years and give them an absolute solid framework and a ton of knowledge, but they've still got to apply that. They've still got to go through that experience, and everyone's at different stages. I have some, students of mine that are absolutely crushing it, and then I'll have 1 or 2 that are really struggling, and that's just down to where they are at and how they are perceiving that, and their thought process and their genetics. There's so much involved in that. But yeah, kind of a long answer to that question. It's an ongoing thing, to be able to be very routine for me. being dyslexic, that makes sense. But I've always ran by a diary. I've had a calendar. It's like, what am I doing this hour? What am I doing the next hour? What am I doing tomorrow? What am I doing Sunday? I thought I was just being proactive, but really it's like a coping strategy.
Yeah. Now, if you had to sort of like pick one mindset thing that you would recommend somebody go away and try and, master, or at least integrate into their lifestyle, what would it be?
Good question. I would say get a sheet of paper and a pen and draw a line down the middle. And on the left side, I want you to write down things that you are both grateful for that you've achieved or you have now, and things that you are excited about potentially achieving in the future. And then on the other column, write down things that you're not too happy about right now. And if you have way more stuff in the left column, the positive stuff, the things that you have gratitude for, you're on the right path. That's good. If your column of negative stuff is way bigger than the positive stuff, then forget about trading strategy for the time being. You have a mindset problem, and maybe consulting a family member, maybe that's a bad thing. Maybe try and find some kind of education around that. It's not me, but finding someone that can help you lift some limiting beliefs. Maybe you have ego, maybe you have some childhood trauma. We all have it, right? And this is going to really help you in life, in your personal relationships, as well as your mental health and professionally as well. Absolutely. So that's an exercise that I've done in the past, and it's something that I think would benefit you massively.
Well, that's we're going to leave the show on that, folks, because that is absolute gold. And I think this goes back to what a lot of other traders have said and not being able to express what they actually mean by saying it, which is these are guys that have been on the show, which is like when you actually improve and get good as a trader, you improve as a person as a whole, right? And I think that kind of will highlight where your improvements could be, and you probably will improve if you can tick off the things that are in that negative column. Hey, Scott, it's been fantastic having you on again. And I think what we'll try and do is jump on a price chart here if you've got time and see a couple of the things you've been talking about. But to start off with, or to finish off with, what's the best way for traders to get hold of you?
You can just search my name in YouTube, Scott Taylor FX, and have a search on there. And I post free videos every single week. You don't have to sign up for anything. I'm just interested in giving value. So I'm posting, it's all technical videos every single week, and just take as much as you can from there, subscribe, take note, and just let me know if it's improving your trading.
Brilliant. Well, folks, we'll hook up a link to all those links in the show notes there below the video or in the podcast description. Whilst you're down there, hit subscribe, like, and that notifications bell, and we'll see you in the next one.